My name is Simon Brown, and in this Finweek video, we want to look at what does a share cost. In a previous video, we looked at cost of transaction, but what about the actual price of the share? On the JSE, we've got shares ranging from 1 cent all the way up to, the time of recording, 1,500 Rand. What determines the differences in those values? How come some shares are trading for a couple of cents and others more than 1,000 Rand? The simple answer, it is sentiment. The complicated part is what drives that sentiment. On the one side of the equation, you've got the people who want to buy a share, and they've contacted their stockbroker and said this is the price they want to pay. Then you've got the sellers who've contacted their brokers and said this is what price they want to sell at. And if we get an agreement on price, the transaction will happen and the shares will be transferred. But what makes those individual decisions is the crux of the matter. And broadly, it's going to be what's happening in the economy. What's happening in the individual share that you're looking at? Does it have a great prospect in future? Are the profits rising, and do we expect earnings to be going up or down? Positive sentiment around a company will naturally see share prices moving higher. The flip side, of course, negativity around a business, perhaps its business model, the profitability of it, can see the prices moving lower. What we do see is that minute by minute, day by day, the prices are moving. Sometimes those moves are relatively small, fractions of a percent, but over time they can start to add up and be 10s or 20s or even 100% on the upside, and in some worst case scenarios, we can see shares collapsing on the downside. Don't assume that because we've got a penny stock trading at maybe 5 cents or 10 cents or 50 cents, there's more likelihood of making profit there. A 50-cent share can double just as easily as a 100 Rand share. And in truth, both of them are going to give you 100% return on your money. More importantly, is that particularly a stock trading at a few cents is probably trading at a few cents because it is in trouble. The likelihood of it returning to high valuation levels is perhaps fairly remote. I never overly worry around the absolute level of the price I'm paying. As long as what I think I'm getting, as long as I think the business has great prospects, I'm happy to pay the price that is currently on offer. We also spoke about cost of transaction and administration fees. Those are also important. Those get added to the price of the share. If you bought a share at, say, 1 Rand and your cost of transaction was 1%, your ultimate price that you paid would of course be 1 Rand and 1%, that extra 1 cent being cost of transaction. If you think that the sellers are demanding too high a price for the share, you don't have to buy it. If you think that the buyers are being cheeky and trying to buy your shares too cheaply, well, then you don't have to sell it. My name is Simon Brown, and this is another in the series for Finweek looking at starting out on the JSE.